Today, Nasdaq halts plans for a crypto custody service because of the regulatory environment in the U.S. Two GOP congressmen criticized the SEC's approach to regulating crypto in a scathing letter sent to Gary Gensler. And Apple App Store founding director Phillip Shoemaker discusses Google Play's move to allow developers to incorporate digital assets into apps on the platform. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Crypto prices are in the green today, but Bitcoin traded below the $30,000 level for a second straight day. Ether, however, climbed back above the $1,900 mark, and Ripple's XRP token shot up more than 5% following last week's partial victory for the crypto company in its long battle with the SEC. All these prices are, of course, as of noon Eastern. Okay, let's talk about the top stories. Nasdaq is halting its plans for a crypto custody service. During Nasdaq's earnings call this morning, CEO Adena Friedman said the change is a result of the, quote, shifting business and regulatory environment in the U.S. A spokesperson stressed that while the effort to pursue relevant licensing for being a custodian has been stopped, Nasdaq continues to focus on the development and delivery of custody technology solutions. Nasdaq announced the intent to launch a U.S. custodian business in September 2022, and it was slated to go live in the second quarter of this year. Meantime, overseas, Société Générale has become the first company in France to obtain a license for crypto services. According to the website of France's market regulator, the French bank's crypto unit is now licensed to offer services, including crypto custody. Next, the Senate is getting ready to take another stab at regulating the crypto industry with a new bill that would place stringent anti-money laundering requirements on DeFi protocols. That's according to CoinDesk, which cited a description of the bill that the media outlet had reviewed. The Crypto Asset National Security Enhancement Act of 2023 would reportedly require DeFi protocols to impose bank-like controls on their user base. CoinDesk also reported that the bipartisan bill intends to, quote, fight the rise in crypto-facilitated crime and close off avenues for the evasion of money laundering and sanctions measures that are critical to our national security. Now, the bill was introduced yesterday by Senator Jack Reed, a member of the Senate Banking Committee. We reached out to his office to review the new bill, but didn't hear back right away. Sticking with politics, Republican Congressman French Hill and Dusty Johnson blasted the SEC's approach to regulating crypto and suggested the agency's actions were timed to overshadow and undermine efforts to write comprehensive legislation for the industry. In this letter sent today to SEC Chair Gary Gensler, the representatives argued that the approach of regulation by enforcement does not result in compliance and customer protection, but instead creates further confusion. They added that certain actions by the commission seem to be timed to coincide with related congressional activity, which, quote, appears calculated for maximum publicity and political impact. We reached out to the SEC for comment, but didn't hear back right away. Last, a Nigerian cyber scammer who was a United Arab Emirates resident and lived an extravagant lifestyle on social media was sentenced to 8 years in federal prison for orchestrating a multi-million-dollar fraud scheme that victimized businesses across the U.S. Illinois federal prosecutors said in a news release yesterday that the scammer was extradited from the UAE into the custody of the FBI in 2020, where he remained until pleading guilty to a single wire fraud count earlier this year. He was ordered to pay $8 million in restitution after already surrendering more than 150 Bitcoin to the U.S. government. He's also been ordered to hand over several high-end watches and cars. All right, on to our main story. Google Play announced a major shift in its policy last week. It will now allow developers to incorporate digital assets like NFTs into their apps and games in the store. So I spoke with Apple App Store founding director Phillip Shoemaker about the implications.
So we've been talking for a while about institutional adoption of crypto, and usually we speak about that in the context of Wall Street. But just last week, we had Google announce that it would allow NFT purchases both in apps and games on its platform. You helped build Apple's App Store, and I'm wondering if you can kind of walk us through the significance of this move by Google and how it differs to their past approach to the crypto sector.
I think it is an interesting movement for Google. In the past, it has been Apple that has kind of extended these guidelines, and Google has followed suit. It's very surprising and very exciting to see Google do the opposite, right? So they're taking the lead on this, leaving Apple in the dust with regards to NFT adoption and NFT usage. So for me, I see this as a huge win for the Android environment, the whole Android ecosystem, because it gives these Web3 developers a direction to release something on mobile rather than having to do non-native web-based apps. You can actually do a native app now on Android to support NFTs and in the future, hopefully other crypto-related assets.
And what is Apple's approach right now? How does it compare?
Well, Apple, for the most part, they'll let you use NFTs in your app, providing it doesn't unlock functionality, providing it doesn't, and providing that you pay the 30% to purchase an NFT, which is the big thing that stops everyone from using NFTs on the Apple ecosystem. Affording 30% in an NFT marketplace is just impossible to do. There's no margins there for them to be able to leverage it. So right now, it's basically non-existent. I don't believe Apple is a big fan of crypto from what I remember back at my time there. So I don't think we're going to see any movement in the Web3 space from Apple for quite some time.
Just generally speaking, how has big tech's acceptance of crypto shifted after all the chaos that we saw in 2022?
Well, it's been slow, right? The shift has been slow. I haven't seen a lot of adoption as of late, but I think as we see more of these older financial companies like BlackRock getting into the crypto space with the Bitcoin ETF and other things, I think we're going to start seeing more tech adoption moving forward.
Obviously, crypto was a big deal in 2021 into part of 2022, but now so much of the interest in terms of VC dollars, in terms of corporate investments, has shifted to generative AI. Can these two sectors, crypto and AI, still garner that same level of attention, or is crypto had its time in the sun and now you're going to see a lot of those investments funneled just towards AI?
Yeah, I think, look, I think generative AI, which is an amazing market, amazing direction to go. I'm leveraging it in different use cases as well. I think that really needs to be at the front, first and foremost, right at the front, because of the amazing impact it can have on the future of work in general. But crypto is not going to go away, right? We're still going to be plugging away. People will still be continuing to just put their heads down and get some work and really work on the backbone, work on the integrity of these systems so they stop getting hacked, and to push the fraudsters out of this space. And the two of them together, I think generative AI in places like identity and others are going to be really helpful to be able to weed out the bad actors from the.
How about personally for your own business? How has sentiment shifted your strategy for identity.com?
It hasn't shifted much at all, right? We are continuing to plug away on identity. We want to solve the decentralized identity solution. If we can figure out a way to work with generative AI to make that more realistic for users, make it more usable for people, that's what we're doing. But for the most part, we're just continuing to plug ahead on our roadmap, heads down, coding away.
Now, you mentioned fraudsters. How big a problem is this still?
I found this out at the App Store. As soon as you're in the position of making developers money, developers are going to try to fraud you out of money. So I think it's still there. We're going to continue seeing it happen. Look, the stuff that went down last year with SBF, with Celsius, et cetera, we've got a long way to go in this industry. We lost a lot of reputation and integrity, and there are still people out there that are putting out bad coins and trying to get people to invest in them. We got to get rid of that and start focusing more on the problems at hand, not a quick get rich quick scheme. That's what's really taking this industry down.
So how do you solve that in crypto if you say that that's what's holding it back? Is it regulation from Capitol Hill? Does it come from self-policing of this sector?
To me, it should always have been about self-policing. The fantasy that people said, like FTX and these other companies didn't put their transaction on the books, et cetera, because they didn't have regulation, was a fallacy. We can easily look to the financial world and say, let's do what they're doing with regards to data protection and transparency of our assets, and heck, holding on to assets that you should be, and not commingling users' funds, investors' funds with crypto funds, et cetera. You have to separate these things. These things were always there. We just didn't have, there was no transparency there. So I think I believe that regulation will help clear this up. I don't think it needs to be. We need to self-regulate. 100% we need to self-regulate. But, people are trying to get out there quick, do it the easy way. And then they see all the problems that come from doing it that way.
Okay, that's all for Crypto World today, but we will be back again tomorrow, so we'll see you then.